Good evening, everybody. All right. Probably this is going to be more of a observe the obvious session, meaning observe the obvious, that if you can look at what our parameters are, our confirming indicators, that as long as it stays above the T line, we can stay long until we see a sell signal and a close below the T line. So obviously that rhetorical question, did we know it was going to go down this big today? Obviously not. But here's where the probabilities always come into your favor. If you see a close below the T line after a candlestick reversal signal, like a left-right combo, the probabilities are that you're in a downtrend, which means the probabilities are better that if you see things gap down, or that's not the right way to say it, that more than likely it's going to be down, and sometimes you're in the right place at the right time on a big gap down. Kind of the same scenario when you see a candlestick buy signal and a close above the T line. The probabilities go against you or go in the other direction. Whoops, that's not what I want to do. As we see in the NASDAQ, again, indecisive trading, bearish engulfing, close right here at the T line. I pretty much closed out probably more than half the long positions on Friday, just because we didn't know what it was going to do on Monday. And let's see if I've got the SPY on here. Same thing with the S&P 500. So some of the other major influences, like crude oil, you can see what's happening to crude oil. Right now it's at 53, down from 63. And this is, again, kind of fitting into that scenario. The magnitude of crude oil price movement might be limited now, since we've got our own supply here in the United States, that we're not going to be pushing or influencing world prices as they move up and down, because we can supply ourselves. We can see what's going on in gold prices. I guess I better get a gold chart. You can see the classic fry pan bottom, J-hook pattern setting up. So that was unusual that gold was still up, but a lot of the gold stocks were down. I'd still keep an eye on AU. Because of the inverted hammer, bounce off the 50. If it opens positive tomorrow, you want to start buying. Because you can see how they kind of consolidated back to the T line, but did not reverse the bullish signal. Okay, so there was a lot of questions on what do you do in a day like today. I'm trying to figure out where well, again, go back to observe the obvious. Anytime you see a close, this is Amazon, the close below the T line on Friday with a left-right combo, making the prospects of things heading down, maybe to the 34, maybe to the 200, maybe to the 50. Now, obviously, don't expect it all in one day, but again, you're putting yourself in a situation where it could happen that way. Things like Apple that were acting well. This is when you can see there's been a change of investor sentiment. When you kind of had your shooting star, probably dark cloud. Let me make this bigger. Gap down. That's after months and months of a steady uptrend. Obviously, today was the beginning of some profit taking. And the difference was, as you can see, this whole uptrend, they've never been able to close it above or below the T line. So Western Digital, here's kind of your examples. Left-right combo on Western Digital didn't close below the T-line. So if it opens lower, logic says close out the position. Except they gapped it down. So what do? Rama, if you see it open lower tomorrow, I probably would take some profits. So, oh, that was on Apple. Yes. For two reasons. Unless they do something tomorrow, like open up positive and bring it up strong, which would mean the market would need to be strong. Not only are you below the T-line on a sell signal, but notice what it does to the trend. Kind of knocks some of the wind out of the sails of it. So that might mean that this isn't the best place to have your money right now. Oh, they got earnings tomorrow. All right, well, you'll be pretty much able to see what they think about earnings as we go into the close. And if I saw the futures correctly, the futures on the Dow were up, 60 or 70 points. So what that kind of infers is that maybe we're going to have a few days of chopping around down here until things get settled around and they can start things back up again. Okay, so what was I illustrating? Western Digital did a doji. So we have at least a game plan where when it didn't do anything decisive today, again, what did it do to the trajectory after a left-right combo? Put us below the T-line and told us pretty much that there wasn't any buying. Now, that was different than the Uber chart. Up 110 right now? Okay. So as we can see in the Uber chart, they opened, traded down, and then where did they close? Above the T-line. That gives us a much better perspective of what to do tomorrow. If it opens positive, you've got a J-hook pattern setting up. So look what happened today when the market was down big. They were buying after it opened, meaning they were starting to trade it above where they opened. You can see the green candle. Same scenario on Uber. Closed just above the T-line. And iRobot did kind of the same type of chart pattern. Closed just below the T-line, which makes tomorrow's trading very simple. Now, right now, we don't pay attention to the futures because by tomorrow morning, they could be down 200. So, it looks like there's some buying going on, but we'll have to see what they look like 10 minutes before the market opens. So there's a very simple parameter when you see something close below the T-line, that if they open it higher, they're probably heading back up. If they open lower, like we saw in Luckin on Friday, that means the buying wasn't really compelling. It was just a bounce that your downtrend was still in progress. So it's always important to see what they do the next day. So if the market's open weaker and this opens lower and starts trading down, that means they aren't going up through here. They're still selling off, close out the position. So a few others that we had in the portfolio at least held up. GELD, G-E-L-D, still staying up above the T-line. Z-Lab, same scenario. CVM, also stayed up above the T line. Let's get rid of whatever that is. And OSMT didn't really back off a whole lot, and you can see that it did a doji right here, still above the 3T line. Getting up in the overbought area, I would still use the T line as a stop. So we were hoping, or I say we was hoping, we had one that was working well, NK, but notice where it finally closed. Finally closed back below the T line with a doji. Still kind of in a wedge, which makes this very simple. It needs to open positive and trade positive tomorrow to stay long. If it opens lower, close out the position. MBOT, you can see how this was rolling over. So shorting this one today still makes for a viable short. If it opens lower, that would kind of imply that we're heading back down to the 50-day moving average. And Weight Watchers, same scenario. In the oversold area, did a doji today, a lower doji. So we have our safety stop to cover our short if it comes back up through today's high. What's the warning? You're seeing a doji in the oversold area. And VNet was one that if you held on to it, with it staying above the T line, when they gapped it down, you closed out the position. Yeah, we'll get to some of those here in a little bit. I think even Tesla, as far as one of the biggies, still stayed up reasonably well. So you stay long on this one. And NVIDIA, notice what it did today. Whoops. After the bearish left-right combo, the gap down, and it didn't come back very well. But if you were long and you were hoping that it was going to come back up and it didn't, now you have a parameter to work with. It has to open positive and trade positive to stay in it. If it comes back down through today's open, you close out the position. It's not to say you won't be trading it again. Just right now, you probably don't want to be trading to the long side. Okay, so the virus stocks are still doing well. You can see NNVT still up dramatically. APT up dramatically. So this is the type of charts where you don't trade it off the daily chart when they're moving this volatile. Just flip over to your 10-minute chart and watch what the 10-minute charts are telling you. And what was the other one? Vivo. So I bring these up, that's on the 10-minute chart, because there's some people that want to trade the active stocks. We know we've had this big best friend kicker type gap up. What do we have? Profit taking today. So if you're trading this, what do you look for? See if it's going to open positive. If it opens positive, you pull up your 10-minute chart and start trading off of that because it's probably going to move around quite a bit. Okay. So there were some good bullish charts today. Square kind of did a belt hold signal. This one I wouldn't be afraid to be buying on positive trading tomorrow. Twilio wouldn't be afraid to be buying on positive trading tomorrow. Probably the same with Uber. And there's Alta. Same scenario. If it opens positive, what do you got going on? There's your J-hook pattern setting up. And Beyond Meat, I guess announced that they were going to be doing stuff with Denny's restaurant. Still looks like if you're long, you stay long. Today was a good day for this stock, obviously with the market trading off like it has been. And this one, CDMO, was our convergence analysis. Yeah. Bullish engulfing right off the 50 up through the T line. Now you've got a double doji setup with then bringing it back down to the T or the 50, coming back up. So if this opens positive, the probabilities based upon this setup is it's going to trade positive, probably of this magnitude. So you want to be ready to be a buyer on this one. I don't know whether I pulled up CDNA. Yeah, big bullish engulfing. Here's your first likely target. As you can see, there's kind of a trend setting up. And here's another one that is at least giving the perspective of buyers coming in because you had kind of an inverted hammer doji, some bullish confirmation today. I'd still be a buyer of this one on strength, especially if it comes up through the T line. And ADBT, there was your best friend. Notice what this did. It opened lower but came right back up. I'd be a buyer of this one on positive trading with the anticipation they're coming back up at least to this level and maybe into that trajectory. So the fact that you have a best friend signal gives you at least one or a set of stocks or a signal that tells you there's a lot of strength no matter what the market was doing. Left-right combo on the stocks, the bear stocks. So see if this opens positive, which means the semiconductors are still selling off. And GSX, big bullish engulfing. There's your, let's see, probably, no, just a J-hook pattern. I was going to see if that was but this one, I would be ready to buy, especially if it opened positive. And a couple more on the long side. Philly, big belt hold signal bouncing off the 34. Watch to see if it can get up through this downtrend. So you get ready to buy this one on positive trading. Let's see. Oh, on ADPT. All right. And Montana. There's your J-hook type setup. So this one can be bought on positive trading and just use the T line as your stop. What's your upside potential? About 11, 12 points. What's your downside risk? Maybe 3/4 of a point. All right, so what we want to look for on the downside is when they gap down, that's usually indicating, obviously today, this was the continued selling of this one. There's Sedge. Solar Edge. Doji gap down. Probably some more follow through. So let's see what the other solars did. Maybe a bearish J-hook pattern on First Solar and CSIQ. Oops, this one's been selling off already. So, depending on how they open this market tomorrow, I know a lot of people are trading this one, JMIA. When you started seeing these long-legged dojis, you definitely put your stop in someplace, like at worst, at the just below the low of Friday's low. Let's see. SP, hang on to your individual ones until I tell Jim to do the double line, or I'll get all confused. ENPH had been a good one for the uptrend, but again, there's your doji gap down. So this is why you just have a safety stop below the T-line, just in case of something like this. That's a viable potential short. HMI, there's your doji. So this one makes for very simple trading strategy. If it opens lower, you can short it. If it opens higher, you can go long. If you got your J-hook pattern. So that's the benefit of knowing what we should expect after a doji, especially sitting right on the T-line. There's your bearish engulfing on MITSI. I would suspect your first target is going to be the 50-day moving average. Hard time reading whoever's handwriting this is. Slow curve on CZZ, another one that has a likelihood of heading back down to the 50. Now, definitely like these little slow curves because it tells you investor sentiment is getting weaker and weaker, then blam, they knock it down hard. CGNX, bearish engulfing gap down. You can short it on weakness. Just watch to see what happens once we get to the 50-day moving average. And Goose, there's your slow curve. What should we expect? Wave 1, wave 2, now a gap down going into wave 3. So if this opens weaker tomorrow, you can start shorting it. And that will also be probably a function of seeing the markets open weaker. Another kind of dumpling top, gap down on CLB. Be ready to short this one on weakness. And it's just AAOI. Left-right combo, gap down, still some more downside. So a lot of people will say, well, how do you protect against something like this? You were kind of forewarned. You had your E-mean star signal. You had a close below the T-line. So, again, anytime, first of all, as we went through our top rank signals and patterns, remember me saying that if you see a left-right combo, you don't have to wait for confirmation. Close it out because they've already telling you what's happening. They're starting to sell. And you add the aspect that they closed it below the T-line, just that much more evidence that the sellers have taken control. So tomorrow, there's not a whole heck of a lot that you can do until we see what they're doing as far as the open. I wouldn't suspect, unless somebody announces they've discovered the cure for this new virus, which they said will still be a few months away. But the other side of that analysis is I don't want to sound cold-hearted, but I think, aren't the statistics even every winter when the flu hits, there's a good number of people that die from it? So I don't know whether this is any better or any worse than any other flu. So just the publicity of it, this is what I was getting to, is that is the reason they're giving for the market selling off. But if you really look at the market, moved up, sold off, moved up, sold off. So from the flu here in the United States, all right. So the fact that there's been 81 people that have died from this flu sounds like a little bit of overhype. So anyways, it will be probably watching this type of pullback to see what's happening from this level. So that's about all I got. As I say, the one that we really should like is what we call the convergence analysis, which we did the training this weekend. But everything you can see leads up to thinking or understanding where the buying has occurred, right smack dab off the 50 through the T line, and then use the 50 one more time. Definitely will be a buyer of this one. All right, so are there any general questions on candlesticks? So when there's no definitive signal, like with Apple, didn't close below the T-line yesterday, and then it gaps way down like it did today, do you sell right away or hold to see what happens tomorrow? If you didn't sell today, what type of signal did it produce today? Obviously a doji. Was there a way to project that it could sell off that hard? Not really. So it's not the fact of we couldn't expect it or anticipate it, because there's going to be a lot of times that the signals or but there's nothing to alert that there's going to be a reversal in that particular stock, other than maybe analyzing the market was rolling over and some of the other ones were rolling over. But I still wouldn't have closed this one out because there wasn't really that much signs of selling yesterday. Yes, so there was no way to know on Friday to sell. Today, I may have, would have sold, especially with the low, the low price movement from here, a doji type day. After, near the close, I saw it wasn't doing a whole heck of a lot. Actually closed below where it opened. I may have closed it out. Now, do you do that with all of them? Well, if you held on to it, and if you first of all saw something like this, if you happen to have been following this one, you saw it gap down, and then it continued to sell off, I would have closed it out, because we don't know how far it's going to go down. Now, the other ones, waited to see. And then once they started coming back up, especially through the open, you just waited to see what it did by the day. Now, had this closed as a doji, I would have closed it out today because you would have had a signal and a close below the T line. Oh, what is the next signal for Apple? I would guesstimate maybe the 50-day moving average. Now, what would your targets be? This is where we have the advantage of being able to kind of see what everybody else is watching. Maybe this is your first target. Maybe that's your next target. Or maybe you put Fibonacci retracement numbers on, which kind of coincide with this one. Then there's a 50% retracement and then the 62% retracement. Not that they're going to go back to those levels, but those are levels we can watch to see if we start seeing buy signals. All right, so Apple, if it has earnings tomorrow, again, probably the people in the know will either be buying or selling going into the close. That'll give you a pretty good clue of what the expectations are for the people that really follow it. Think that the earnings are going to do for the stock. The purple, this is the 34. I think it's 34. Yeah, the 34 exponential. So you got the 50. I don't even know where the 200 is on here. The red line is the 200. The blue line is the 50, simple day moving averages. The 34 is the exponential moving average, which works reasonably well. But then the T line is our most important one for short-term trading. Oh boy, probably that's hard to say. Depends on what they're doing with the market. So first of all, if I saw the market gap down, and I'm thinking, all right, let's watch to see what it's doing, and then you can see that once it gapped down, it just kind of traded flat all day long. It may have been near the close before I start closing out positions. When do you look at the buying versus selling for possible earnings clue? Right near the close. If they're buying going into the close, meaning if you see it start moving up about 20 minutes before they close or start moving down about 20 minutes before the close, that will tell you pretty much what the people that are really analyzing that stock are planning to do before the end of the day. We did NVIDIA, right? NVIDIA didn't move very much once they gapped it down. But it did trade above where it opened, which means that because it did a doji, we know what to do. If it opens lower and trades lower, you close it out. If it opens positive, then you wait to see if it's going to bounce up. Joe, they work just as well. Now, usually the 20-day moving average will work much better when a market is trending. So worst case scenario, put both of them on there. The only reason I keep very few is because my main investment criteria is the signal or the pattern itself. So if the market is waffly, the 20 may not work very well. The 34 works reasonably well, and it works a little bit better over on in the futures market. Okay, I guess with that, Jim, go ahead and do the double line. And and in 2.8 seconds to the next double line. All right. SDC came back up. You stay long, but you put your stop at the T-line. If it comes back down through there, it's going the wrong way. EB stayed above the T-line, but I would use the T-line as my stop. It better stay up above the T-line at this point. Walmart did kind of a belt hold piercing signal, but just you can be buying it if you like it. Just realize you're not going to make a whole heck of a lot of big percentage, so probably more option spread trades. SGEN, that one I'd get ready to go short on the basis that you're in a downtrend. You did a bearish Harami right at the 50. You close below the T-line. Where's your next likely target? Right back down to the bottom of the trend. CYDY. Not anything. Gary. BCRX. Not great, but if you like it, you can be buying it. You definitely would be looking for the first target to be the 200-day moving average. Wouldn't be the most prolific chart. This one, you can see the fry pan bottom breakout. I would suspect the 200-day moving average being the likely target. Wynn Resorts, stay short. If you're short from this gap down, I would suspect it's coming back into this range, and I'd have a safety stop if I was short at today's high. It shouldn't come back up through that level. Denali is doing well. J-hook type pattern, stay long. You're in the overbought area, so have a safety stop somewhere. At least at the today's open. But yeah, you stay long on this one, and you get ready. Now that you're starting to move away from the T-line to start moving toward your 10-minute chart. EXPR, another one that be a toughie. If you're long, it has to open positive tomorrow. If it opens weaker, now you're just kind of caught in a sideways mode. And AVID, I'd be ready to short this one on a lower open tomorrow. You look at your stochastics trading lower. QCOM, be ready to short this one. There's your bearish Harami confirmation. Now notice your Doji didn't hold at the 50. If it opens lower tomorrow, that becomes your next likely target. Alto we did. It's kind of a belt hold. You can buy this one, especially if it comes back up through today's open, giving you a J-hook pattern trajectory. Here's another one. That's kind of a big hammer reversal. Another one that you can get ready to buy on positive trading. They took out a lot of sellers today. Nova Gold, bearish left-right combo. If you're long, this one has to open positive and trade positive tomorrow. If it trades lower, close it out. That tells you they couldn't break through this level. Southwest. Oh, you stay long. It's still kind of a junky chart, but your big booster signal. You can stay long on this one. Trill, just stay long. J-hook pattern, safety stop right now at today's low. GSK, be ready to go short on a lower open. Got a bearish left-right combo. We did Walmart, CNST, nothing there. I wouldn't be long or short this one. Just no direction right now. AMRN, another one. Boy. If you stayed long, and you could see the failure, I would still, that's a toughie. So with that much oohing and awing, I would probably say I'd be someplace else. Coca-Cola, stay with it as long as it stays above the T line. The 20-year notes, stay long, have your safety stop at today's low. And Square, we did, didn't we? Big bullish belt hold. Be ready to buy this one on positive trading. Cuervo, kicker type signal. I'd still be shorting this one on a weaker open. Because that would tell me the 50 didn't hold, this level didn't hold, maybe coming back down to fill that gap. The Qs, short. Watch to see how they open it tomorrow. And the stocks also had a good bullish day, and a doji today. Oh, not a doji. So if you're going long or you are long, use today's low as your stop. It shouldn't come back through that level. AKCA, nothing. Maybe you've got an uptrending channel, but that's kind of a junky chart. I'd be someplace else. And Marna, you can stay long as this one stays above the T line. MNOV, you stay short if you could have shorted it. Observe the obvious. You were in a downtrend. You're in a trend channel. I would suspect it's got a little bit more downside. iRobot has to open positive. To stay in it. If it opens lower, close it out. The hogs went down the limit today. What's on here? Oh. Which one? Oh, okay. The April ones went down the limit. Cattle was down, almost down the limit. Procter & Gamble, again, your quintessential institutional trader, sideways. I wouldn't be trading this one. Just not enough activity for good trades. Now, if you're in it long term, I would just stay with it as long as it stays above the T line. CDTX, what happened here? Well, big move to the upside. Look for a 45-degree off of here. And CGEN, nice little slow curve breakout with a doji sandwich. You just stay with this one. Zynga, stay short if you're short. Your bearish left-right combo is just A very, very compelling reversal signal. If you're short, stay short. Have your stop at today's open after the gap down. Netflix has to open positive and trade positive to stay in it, so it stays above the T line. Lake, stay long. We did, Myrna, right? Stay long. AMED, look for the 200. And back, you can buy this one on positive trading. Beyond Meat, did we do that one? You stay long on this one as long as it stays above the T line. CVM, another one, you stay long, put your stop, safety stop at the T line. Maxar was closed out on Friday with a closing below the T line. Right now, I wouldn't be long or short. This one you can get ready to buy because you got the little inverted hammer right off the 50. You can buy this one on positive trading. INO, just stay long. Your safety stop should be at today's low. Not enough there to work with on that one, Diane. Look for this one to go down to the 50 if it opens lower. AGRX. Stay long. I'd use today's low as a stop. This one you should have been out of today. And OSMT did a doji Harami. If it opens lower, I'd close out half the position. If it comes back through the low of today, I'd close the other half of the position. Hairy. QCOM. It could be right here, but you've gapped down through the 50 and you did a doji. Stochastic's still heading down. Had a good sell signal. See how they open it tomorrow. Workday. Where did it fail? Shooting star right here at the 200. I'd be ready to short this one on weakness tomorrow. So it traded positive, but if it opens lower, get ready to short. If you're long, you can stay long. If you're thinking of going long, look for the bobble breakout coming back up through the 200. I think we did this one. Big belt hold. Get ready for the J-hook pattern. And Twinkie, you can be buying this one. It's got a bullish flutter kicker. If you're buying, just use the, again, the T-line as your stop. Was a Southern Company. Yep. Now you're in the overbought area. Keep your safety stops at the previous day's open. This one has to open positive. Look what happened kind of at your breakout, unbroke out. So if you're long, it has to open positive and trade positive to stay in it. If it opens lower, you've broken the fry pan bottom trajectory. Close out the position. Here's another one. Look where it closed after a big stretch right at the 200-day moving average. Makes this very simple. If they open this lower tomorrow and you're long, close it out immediately. You can always buy it back if it comes back up through the 200. NH, nothing. I would have been out of this one. And PRVB, another one that has to open positive. Again, if they have an up day and then open it lower, you can be short or get out of the position right away. Mark, to go back that far is not, that's not what's happening right now. So if somebody's looking at a chart, they're not going to go all the way back to August. They're looking at what's happening at this level. So I wouldn't be going back to August to see what's happening in the current chart, because we're working with today's investor sentiment. Well, this one's been stronger than bear's breath. Guess if you got into this one, you stay with it. I'd put a safety stop at today's open. We did SDC, stay long, space. Can still be bought if it opens positive. If it opens lower and starts trading down, close it out. Macy's, stay short, but now watch to see what it does here at the 50. Okay, so our important analysis tomorrow is seeing what the pre-market futures are telling us. Now remember, there's been psychological damage up here because it's been a steady uptrend, and a hard sell. So if it's a bullish market, it may take a couple of days of indecisive trading, but then if it comes back up, that means the uptrend or the bullish market is that much stronger because they've taken out a lot of the weakness. All right, I guess with that, we're done early tonight. We'll see everybody bright and early in the morning. We'll see you then.